I think the gold price, would be still as it is, roughly about 1750 or so, maybe a little bit higher. My predictions for next year are around 1850, but we'll see. I mean, this is difficult times when it comes to the financial markets, and that has having an effect on gold. So gold is now sort of the ultimate currency. Everyone is reverting to the currency if you see the way that gold sales are going and so on. But we're still very bullish on it. We've always been gold bulls, and so we're seeing something a little bit more these days with all the financial crisis around and so on. But we're very, very gold bulls, and so it's very important to all gold miners. But we'll see an increase in our margins. That we'll see quite quickly. Of course, when we see the gold price as it is today, it's only been like it for just over a week or so. But we're here for the longer run, so we also have to look at the longer term as well. These times are a little bit different to what they have been in the past, because I think we've seen a lot of share prices come down. In fact, gold share prices have sort of remained static or increased slightly, even despite the very high gold price. We do see a lot of liquidity in our share prices. People are trading a lot of Harmony shares, for instance, on a daily rate. And so this is quite important from a liquidity point of view. I think people are seeing value in the share price, and they're probably trading a lot on the shorter term. Put it this way, there's a group of shareholders who are doing that. And other shareholders are in for the longer term. But yes, you're absolutely right. You don't see it on the share price, but I think in these sort of times, one will see it. One can't just react in the short term. Most of our growth in South Africa is from those projects we spent a lot of money on. Growth in Papua New Guinea will come from Wafi-Golpu. That's quite a long way into the future. Production would, if everything goes well with feasibilities and studies and so on, probably here around 2017. So it's quite a long haul to get there. But meanwhile, we've got a lot of focus on our South African assets and getting full production here. We're always on the lookout for mergers and acquisitions, always on that sort of lookout. But these times when the gold price is so high, you can imagine the cost of that acquisition would be fairly high as well. So it's not something we're aggressively looking at, but we just keep a watching brief. Our real focus has been on increasing gold production from our newer assets. So these are the assets we spent a lot of capital expenditure on. Doornkop, Phakisa, Kusasalethu, Hidden Valley and PNG. And that's really where our growth of gold is coming from and should come from in the future. The costs have risen a fair amount. Electricity, of course, is a big cost in our lives. It's probably closer to about 16% of our costs. The costs are a little bit lumpy during the year, so some quarters are higher than other quarters. This quarter we suffered from an increase of 25% electricity, and then we had 1 month of winter tariffs. Next quarter, of course, has winter tariffs, 2 months of winter tariffs in it. So we see that some costs are a little bit lumpy. We had a lot of public holidays during the last quarter, and that creates a few other problems. We obviously like to try and get as much production as we can. Costs us a bit of overtime, and then if we have any of those sort of public holidays, we try and catch up on maintenance and those sort of things, stuff that would take normally a little bit longer. So we do see costs increasing sort of quarter, and some are lower, but so it's a little bit lumpy and a little bit difficult to predict. But as the gold production increases, we should see better costs going forward.